Which leads us to the present and where we're at now and why I'm a little concerned. Not quite yet, but I'm a little concerned. So let's get into where we're at now, because it is critical to understand where we're likely heading next. And I'm going to try and prove this scenario, which is not the most bullish, let's just say. It's a little bearish. Um, one of the Within this scenario, there is a possibility that the bull market actually ended, technically speaking, ended on August 13th. Now, it's still not my base case because as a cycles guy, we have seen plenty, not many, but we've seen 3 or 4 of these 4-year cycle highs. So the end of a bull market, just so we're doing it from a cycle standpoint, is just a 4-year cycle high. It's nothing else. There's a secular bull market in crypto because of fiscal deficits, monetary debasement, and stuff that we all know about. So these high fiscal deficits, monetary debasement, all these countries in the developed world, they're either bankrupt or going bankrupt fast, and they're going to continue to print money. And so there's a secular trend that pushes these assets higher. But within that secular trend, we have highs and lows of different magnitudes. This is the subject of lesson 1 of my cycle scores. You can find it on YouTube. But the short version of that is there's big cycles and smaller cycles. And this 4-year cycle is what most people refer to as a bull or bear market. It's not perfect. From a 4-year cycle standpoint, 2019, for example, Bitcoin was already in a bull market, but most people don't say that the bull market started until 2020 when they started printing money after COVID, March of 2020. Now, from a cycle standpoint, the actual low is in December of 2018. So from December 2018 through November 2021, Bitcoin is in a bull market. Again, from a cycle standpoint, November 21, November 22, bear market. That is a down phase of a 4-year cycle. So when I say that August 13 may be a bull market top, I'm specifically saying this could be a 4-year cycle high. And I'll caveat that by saying it's way too early to make that assessment with certainty. We don't know if this is actually a 4-year cycle top or not. It's starting to smell like one or look like one, but we don't have confirmation yet. And this is where I remind everybody that there's basically 2 models that we're using here. We're using or 2 indicators. We're using cycles to tell what happened in the past, to make sense of what happened in the past. These are the cyclical patterns that you can see. It's a price action. We break down the price action into cycles, and these cycles we can make sense of in the past. And as we make sense of those cycles in the past, we could try to project the future. But I would call this is what in economics we call a descriptive model. We're describing what's happening now based on what happened recently or in the recent past. Now, recent past depends on which cycle you're using. If you're using a 4-year cycle or an 80-day cycle, or what have you, or a 20-day cycle. The thing about the cycle model is that as a descriptive model, it tends to be far more accurate, tends to be far more powerful. It's wrong less often than forecasting models, forward-looking indicators, which we have 2. We have the cosmic signals that we all know and love. You can find them on the Discord. These cosmic signals are based on planetary movement, and they have shown to be remarkably accurate for the price, for forecasting the price of Bitcoin. In fact, so far in 2025, we have missed exactly 0 turning points. 0 highs, 0 lows have been missed by this model. That's another way of saying we got all of them. We got all the turning points, all the lows, all the highs within this model. So it's very, very accurate. There's another model that's also forward-looking, and it's also highly accurate, and it has nothing to do with cosmic signals, and that's central bank liquidity. This one has also nailed every single 80-day high and low. And the best part about this one is that it's kind of like a drawing, and I love that. I've always wanted to have that personally. So it's kind of like a drawing of what the market is going to do in the future, and it's based on whatever money central banks are creating or destroying. When this line goes down, they're withdrawing liquidity, they're destroying money. When the line goes up, they're creating money. Since July 14, adjusted with this 84-day offset, they have not done anything. They've been sitting on their hands, basically. They haven't created money, haven't destroyed money, they haven't done anything. As a result, Bitcoin is doing nothing. This is further proof that actually Bitcoin is not following this broad M2 measure. It's specifically following what central banks are doing, or mostly following what central banks are doing. This is why I'm actually keen on creating this new liquidity indicator, this custom-made liquidity indicator, because I do think that private credit plays a role in crypto assets, but to what extent is hard to say. So I'm just going to do an algorithm that checks for everything and comes back with an actual equation that I can use. More on that when I have results. So central banks have been on pause. They're not printing. As a result, Bitcoin has been on pause. But so we can't really look at liquidity and tell what's going to happen, except we have been able to kind of nail some of these highs and lows using both liquidity and the forecast, the cosmic signals, because, well, we nailed this high here. I said last time, this window between the 13th of September and the 20th of September, that's the next important high. And sure enough, it was. However, liquidity was telling us to expect a rally between this low on the 3rd of August and the high on the 20th of September. That didn't really happen. Bitcoin tried to break out, it failed. Then it tried to break down, it failed. It made an 80-day cycle low here. And I'm going to get into these 80-day VTLs in just a minute here. Why is the cycle model so important? Because Bitcoin crossed below the 80-day cycle low VTL, and we're going to use Perry's version, which uses the low, because in this context, it's actually better. And Perry actually want to get into that in just a moment, because when I said that it doesn't matter if you use the lows of the candles or the close of the candles to draw these VTLs, well, the next VTL, I literally checked, it makes no difference. So usually it makes no difference. Now, in a future version of the model I'm going to test both. But anyways, I digress. When Bitcoin crossed below this VTL, this 80-day low VTL here, let's make this one, let's change this one to a dashed line. Yeah, this is better. So because this is not I wouldn't say this is a confirmed, it's not confirmed yet, this VTL, but this one is. This one connects both 80 days, the 80-day cycle low from April 7 or 9 with the 80-day cycle low on June 22. We connect those two lows, classic 80-day low VTL. Once we have that low VTL, we notice that Bitcoin crossed below it either on the 18th of August or the 19th of August. Now, why is that important? Because so far in this bull market, every single time that this VTL was crossed, a multi-month correction followed. The shortest one was 60 days, and it happened here in 2023. I think I went over this a million times, but it bears repeating because it is important. Every time we have seen these VTLs being crossed, here's the one in 2023. This is the first, I mean, every single time in this bull market, not in previous bull markets. Bitcoin has behaved differently in this cycle, and every cycle is different. Every cycle has a thing that makes it unique. Well, the thing that made this cycle unique is that you have these very pronounced, very regular 320-day cycles. So they're made up of 4 of these 80-day cycles. This is the shortest correction that we have seen post following the crossing of a VTL. This one in 2023 was crossed also in August 17th, almost the same as now in 2025. And not much downside, but do notice that Bitcoin falls for a little, then it goes nowhere for months, and it breaks out on October 23. So you can say that between the crossing of the VTL and the actual breakout, 2 months went by, more than 2 months went by. So that's 2023. In 24, we have one crossover too. This one I know very, very well because I remember it very, very well for some reason. This was the one in June, mid-June 24. VTL gets crossed in June, and Bitcoin doesn't break out until much later in late October of, well, actually, technically the breakout would be here because this is the 80-day top. So what I'm doing is basically measuring the time between the crossing of the 80-day low VTL and when's the next time Bitcoin crossed. After that, when did Bitcoin cross above the last 80-day cycle top? In this case, it took place here in October. It's actually late October too. So late October, we have June to October, we have 4 months. 4 months go by and Bitcoin does nothing. The same thing was true in 2025. Now, I'm going to get into a couple worrying signs that we're seeing. Some of them are obvious. Some of them you may have noticed. Some of them maybe you haven't. But in 2025, we've already had a crossover. So far in the bull market, only once per year. Only one VTL crossover per year. That leads to a correction, let's just say, between 2 and 4 months. Okay? We have one of those also in 25. We've already had it. We had it early in the year. Arben, this is when I met you. I met you when this was taking place. And I believe we talked about this because I was like, I don't like this market. And the reason I didn't like this market, well, you can see it now. Bitcoin was crossing below the VTL. When we were at the Real Vision conference in Miami, Bitcoin was about to cross the VTL. And I believe that a few days earlier, on the 27th, I don't think the conference was on the 27th. I don't remember. What I do remember is just the fact alone that Bitcoin is getting close to a VTL, it usually means it's going to cross below. Usually these VTLs are tested a few times and then boom, Bitcoin crosses below. So the fact alone that prices are getting close to the VTL here in late January, bad sign. It's a bad sign also because the rally had only been going for like 45 days. Usually Bitcoin rallies for a few months before crossing below the VTL. Not so in 2025. That was a major red flag for me. Anyways, we have the crossing over of the VTL. Let's call it February 2nd. And no 80 days. We have a long 80-day cycle correction following that. And the next 80-day cycle crossover takes place on May 18. May 18, right there. So that's about what, 3.5 months. That's about 3.5 months. So you can see between 2 and 4 months, correcting, going nowhere, staying below the last 80-day cycle top when these VTLs are crossed. Couple things there. One, we've already had one in 2025. So honestly, I wasn't really expecting to see another one. I was expecting the market to pick up momentum, perhaps accelerate into a climactic end to the bull market sometime in Q4. Instead, it appears that we're not going to get any high in Q4, number one, because we don't see it on the liquidity indicator. Just going to bring it back in for a second. We don't see any climactic top in Q4. We already have all of Q4 on this indicator. We can see all the way through December 18, and it's just a whole lot of nothing. It's just sideways movement. And Bitcoin is doing a whole lot of nothing. I expect this relationship to continue. And so no climactic end to the bull market sometime in Q4 of this year. If anything, the bull market top has already taken place, which brings us to the present. This crossover here also mid to late July. Mid to late. I keep calling it July. Mid to late August. So mid to late August, the second crossing over of a VTL during the same year. Already a bit more bearish than we have seen before. All right, I just showed you 23, one crossover, 24, one crossover, 25, two crossovers. And if you just look at how much Bitcoin has gone up in 2025, not much. Let's see, where's the start of the year? There. Oh, well, the start of the year is actually at 90. So it went up 20%. So it was rallying by double digits until 2025. We're only up 20%. So the bull market has stalled. It hasn't ended officially yet, but it has clearly stalled. And you look what happened now. So look what's about to, it hasn't happened now, but it's about to happen. So this, like I said, this is an 80-day cycle low. And for those of you who watched lesson 1, if you haven't, please do so, because I walk you through how to find these. Actually, lesson 2, it teaches you how to find cycles. And the 80-day cycle for Bitcoin is found using this 20-day moving average displaced backwards by 10 days. This is called a centered moving average, and the period is 20. So this is it right here. The blue line highlights 80-day high cycle highs and lows for Bitcoin. Again, this is lesson 2. I teach you how to use them and where they come from, not the math behind it, because I try to keep it simple. But this line is peaking here. It's actually peaking on July 14. This pattern, this double top, is so unusual that if you look at the filter, it literally says, and I had to make some adjustments to my model when I saw this, because the actual 80-day cycle high from a closing standpoint, a daily closing standpoint, is August 13. However, the filter says it actually took place on July. So that's how weird this pattern of selling off, rallying sharply, selling off sharply again. That's a first. Bitcoin has never done that because my model didn't pick it up. I didn't account for this particular scenario. Anyways, we have this 80-day cycle sell-off. It ends here on August 30th, and then the blue line moves up. It has already turned up enough. So it's already been moving up enough, this blue line, that my model is saying, yes, there is an 80-day cycle low right there on August. I think the actual date is August 29. Let me put it there. So there's an 80-day cycle low on August 29. Now we have two 80-day cycle lows since this correction started. We have one here on June 22nd, and we have the one for late August. We can draw a second VTL. And check this out. Bitcoin is dangerously close to crossing below that VTL. Now, technically speaking, it doesn't mean anything because my testing shows that a single crossing of an 80-day VTL is enough to say, well, the trend is dead, Bitcoin's stuck, it's not going to do anything for months, and it could sell off. It could sell off. Actually, I was doing a presentation recently where I showed every single crypto bear market started with the crossing of one of these VTLs. That's how they begin. That doesn't mean that every crossing of a VTL leads to a bear market. In fact, most of them don't, but every bear market starts with the crossing of one of these VTLs. But here's the other thing. I have never seen, so for those of you who watch the lesson on the stock market, again, it is free. It's out there on YouTube. Please watch that. I teach something called the double VTL rule. The double VTL rule is basically you take 3 consecutive 80-day cycle lows. Well, in the case of the stock market, use the 20-week cycle low, but it's the same rule. In this case, for Bitcoin, we're using 3 consecutive 80-day cycle lows, and we're drawing the 2 VTLs that result from those 3 cycle lows, and prices cross below both of those VTLs. That's a double VTL. Now, a double VTL, technically, I didn't get into this in the course. Technically, what that means, the pattern that this is describing is a rounded top. It's prices going up, then prices go sideways. That is confirmed by the first of the VTLs getting crossed, and then prices turn down as the second VTL is crossed. Now, this is literally how I would say maybe 90% of stock market corrections are triggered this way. You can see them coming because the double VTL rule triggers. 2 consecutive VTLs get crossed on the 20-week cycle, market crashes within a month or so, you're going to get a market crash. I show that in the lesson since 2008. You can go beyond 2008, going back into the past, and you can see it working over and over again. It's a great tool for predicting important highs in the stock market. Now, in Bitcoin, we've never had that. We have never had a double VTL being crossed. This will be the first. So what does it mean? Well, I don't know what it means. But I do know it's not positive. It's not good. All right. I don't know what a double VTL being crossed on Bitcoin means, but it's a first, and it's not a bullish pattern. I've seen this in other markets. The lesson on oil, which is coming up probably by the end of the year, I'm going to have it on YouTube. Some of you have watched it. I teach the same double VTL rule with an 18-month cycle. So it's not about the cycle, it's the rule itself. And some markets, they like doing that. They like tracing out these rounded tops. It works for rounded bottoms too. I have seen a few of those on Bitcoin, the double VTL being crossed to form a low, but I've never seen this rule trigger to form a high. That's a very unusual pattern for Bitcoin because it's telling us that the market is rounding off into a high, and it's probably going to turn down sometime in Q4. That will be the view from the cycles. That's why I started this whole session saying, well, this cycles are descriptive and they're quite accurate. This type of pattern is not bullish. I have never seen it on Bitcoin. I've seen it in other markets, but when I do, it usually triggers these long, drawn-out, topping out processes that take months to play out. But at the end of that pattern, the market sells off sharply. The fact that it's happening now on Bitcoin, if this pattern were to be completed, it would signal that this double top in July and August is likely a 4-year cycle high. That will be the read. That will be the read that we're forced to make. Is this looks like it's over. Now, I will say it hasn't happened. As of this recording, it has not happened. So Bitcoin is still above it. You can see that it's testing it. And this morning, it got dangerously close to it, but it managed to rally above. Maybe it will stay above. Here's why I'm not so confident that it will. I'm looking at liquidity again. So I'm looking at liquidity. Here's liquidity. Liquidity is telling us if I fit the curve, I need to fit the curve now because Bitcoin is really not following it. So we fit the curve. There we go. That will be it. That's a nice fit. There we go. So you can see that Bitcoin did top out alongside liquidity. We had this forecast for a top on liquidity on the 23rd of September. The forecasts that I have on liquidity that I'm going to share in a minute, they show a top actually being on around here, on the middle of this pattern. Because later I noticed You could make the case that the area between September 4 and September 23 is just liquidity really moving sideways. It's only a high on the 23rd because it rallies for a couple of days. That's not really how we should read liquidity anyways. And so you have this sideways consolidation here, which matched this sideways or this reversal window, quote unquote, that we have on the forecasting model between the 13th of September and the 20th. So what I'm trying to say is both the forecasts that have been super accurate so far and liquidity, which has also been super accurate so far, they both point to this mid to late September high being important, significant. And both the forecasts and liquidity tell us that the next key low is going to be in October. Now, here's the thing. If Bitcoin is to avoid breaking below this trend line, it needs to rally significantly. It needs to put some distance between it and the VTL. And what would it take for that to happen? A significant rally. And honestly, Bitcoin would need to just at least go back to 120,000, 120,000 and stay above. Maybe Bitcoin manages to have a strong rally, let's say back to the all-time high, let's just say. Let's paint that scenario. Then maybe it can sell off, make an October low, and avoid crossing the VTL. Suffice to say, at this point, the way things are laid out in front of us today, this is very unlikely.